Ladies and gentlemen of the crypto space, we're having a Friday, November 14th at 12:57 p.m. And I'd like to announce that it is official. It's over. It's all over. It's not coming to an end. When I say it is over, it is past tense. It has already ended. We have confirmation that it's all over. There's nothing left. And y'all might be asking, what is over? That is the most important thing to understand. The business cycle is over. Have you seen the headlines? Do I have to pull up the headlines? I don't have them to pull up, but if you don't know what they are, it's the layoffs. It's the speed and pace of the economy. It's credit. It's probably GDP, but GDP is all plastered over with the fiscal spending. And that's been the story basically for the last 5 years. They plastered over a business cycle contraction in so many regards since 2022 at least the last 3 years, to the point where we probably would have been in recession if they didn't do all this fiscal spending. And there's a very obvious reason why they did all this fiscal spending, because we couldn't handle a recession. 2 years, 3 years of negative GDP. So instead, um, you get the inflation of currency supply vis-a-vis U.S. government domestic credit at the government level, the fiscal level, um, and that distorts the price of money. But that's only part of the equation. Probably the most interesting part is not just where we are in the business cycle, and that we really need credit to expand at U.S. public sector level. Or private sector level, because public has been expanding, it never contracted, whole fiscal dominance conversation. But we're at the point where all the factors are in play for private credit expansion at the global level. So much of the conversation that everyone talks about on social media is about US domestic. And that is a very big part of the equation, given that we live within this domestic reality and the vast majority of folks that listen to me. But there's a big planet out there, and the bigger part of the story is not US domestic. The bigger part of the story is international, particularly international. Excuse me, guys. Long day. International currency supply of dollars, dollar debt. Now, so much of the story is how much US government debt there is. But what's much more important is international debt, dollar denominated. And that's what most folks don't understand. That's where everyone gets definitely thrown off, the whole euro dollar market. And what does that even mean? It's how do you go to a bank in England and give them $1 million worth of 10-year US government bonds, and they let you borrow a $500,000 or $500,000 worth of dollars, and dollar liabilities get deposited into an account. There's no dollars involved. The bank doesn't have dollars. They're crediting you dollar liabilities against your collateral, which is dollar denominated US government debt instruments. And that just throws everyone off. Like, where did those dollar liabilities come from? So the whole world really started changing 70 years ago, in the 50s, 1950s, that is, when dollar liabilities became consumable as US dollar currency units. Now, we always come back to the story because people still don't understand why, when the business cycle comes to a bottom, the it is a leading indicator of currency supply expansion, which is further a leading indicator of nominal price inflation in assets and consumables. Assets first and foremost, because if the currency supply is expanding, people are primarily looking for investments, places to park capital. They're not necessarily looking for consumption. You see the consumable component of credit with regard to private credit cards, and where are we with that? That's probably topping out, at least cyclically. Private credit is at all-time high. And that's the same phenomena of currency creation because they're not spending dollars, they're spending dollar liabilities. The credit issuer, Visa, MasterCard, is extending a liability for a dollar, adding it to a deposit account of a retailer primarily, maybe a wholesaler. But the point is, they're transferring a liability, they're creating a liability, and that liability is a debt of myself who made a purchase on a credit card. So you see, debts and liabilities. This all comes down to double entry accounting, ladies and gentlemen. And without retelling the story over and over again of the Eurodollar system, this is basically the way it works. And this is why, when you're at the bottom, the end of the business cycle, and credit needs to expand so desperately, you're looking forward looking into the appreciation of asset prices. Now, it's complicated because there's a lot of things to allocate capital to. These markets are massive and they're global. And when we're looking at the market that we're interested in, these crypto markets, we're looking at a market that most people don't look at, most businesses don't look at, most corporations, most family offices, most hedge funds, they don't look at this stuff. They're starting to. Since when? Since 2020, the last couple of years. So change starts at the margins. And that's probably the best expression I could offer of where we're at. Now we're looking at the Bitcoin chart over 2 year period. That's a bit of a myopic presentation of what I'm trying to describe. In order to really, the only way to describe to you what goes on in my mind and how I look at where we are, and that's probably what most people are interested in what the captain thinks of where we are. We have to look at the DXY. But we're not looking at no 1 hour chart. We're not looking at no 4 hour chart, no daily chart, no weekly chart, no monthly chart. You have to really zoom TF out, zoom the hell out to really get a sense of what the hell is going on, where change starts at the margins and how long a change takes in this global financial system. When I think of global financials and I think of a change starting to occur, I think to myself, 2 years, 3 years, 5 years, you start to see the change over a 2, 3, 4, 5 year time frame. And those are the big changes. And that's what just happened over the last 5 years between 2020 and today. There's a structural change in currency supply, in debt and credit, the way money moves, the way money is created, the investment landscaping between AI and robotics. Come on. The whole system is changing with regard to what is and what is not investable. We had a brief stint of alternative energies, and even that's changing, but there's no Pandora's boxing that. Solar is a big deal. You could easily have a breakthrough in tech and what a venture capitalist uh, accumulate 50 bill and deploy into some desert in the United States some massive solar operation, and that would change things, and that would be structural. And that's the type of thing we've seen over the last 5 years, that structural change where something like that is not unreasonable. Something like that is increasingly likely rather than decreasingly likely. Like 5 years ago, the idea of Tesla's megapacks, the giant batteries to smooth out the electrical grid, that was far fetched. The idea of robotics 5 years ago was far fetched. It was very sci fi. The idea of AI, of me being able to go to Grok.com 5 years ago and talk to the computer, and the computer could actually search all the information on the planet that's accessible on the internet and come up with logical, coherent, rational, conversational responses. It was not even conceivable. And this is what has occurred over the last 5 years. So that's where my mind's at. The change over the last 5 years isn't at an end, it's just starting. So you're, we're heading into a period of time where you have the two most important confluences. This change that has started in technology, robotics, AI, and financials, the financial landscape, this plumbing that we talk about all day, every day, these crypto markets, these fundamental primitives, these currency units, and what can be done with them. So we have that change combined with what has occurred between 2022 and today, which is basically the bottoming out of credit and the drying up of excess capital. They're literally they took the Fed with QT took the global financial system and put it into a beef jerky dehydrator. It is getting dry as a bone. Look at all these layoffs. Um, and all the Treasury did and Congress did, and I'm sure this is geopolitical collusion across the entire planet, was they agreed and coordinated at the central banking level as well as the government the government treasuries government's treasury level to paper over the potential deflation as they put the global financial system in the dehydrator, if that makes sense. And that's what they did. And they printed the shit out of everything and kept everything at least solvent. Look what happened in 2023 with the United States banking. Was it March of 2023? Those that would have been contagion if the FDIC didn't step in and the BTFP program didn't come online. Dare we roll the clock back to what it all started in 2019 with the standing repo and then the standing reverse repo. Oh my God. All these programs and the DTCC, centralized clearing of US treasuries, all of that is to manage liquidity and to manage volatility and this global volatility suppression regime. All of that is to just keep the wheels on the car, to prevent the wheels from flying off until they could get the financial system dehydrated enough to to stabilize public perception of not even just consumer price inflation. We're talking about consumables price inflation. That's really what the general public gives a shit about. The general public doesn't give a shit about price inflation. Um, they care about housing price inflation and consumables price inflation. They want stocks to inflate in price. They want gold and precious metals to inflate in price. They want their collectibles to inflate in price. They want their crypto to inflate in price. They want everything to inflate in price except the stuff that they stuff their mouth with. And that's the political game. So the political game really going forward is going to be quarantining price inflation to the markets where the general public has a political appetite. Does that make sense? So they need the inflation because they need to nominally service tax receipts. So the governments need the tax receipts to pay for all this socialist bullshit, and people. But frankly, that's I think that's a big fat period. All the socialist bullshit, all the entitlement programs. Everyone's entitled to something, so they need the tax receipts. They're not going to get it from real estate bubbling. What are we going to double real estate prices? Oh my God, can you imagine the public outrage if real estate prices doubled? Can you imagine the public outrage if gasoline prices doubled or food prices doubled? It'd be an absolute political disaster. But could you imagine the public excitement if stock markets went up 50%, 100% over the next 1, 2, 3 years, 4 years, 5 years into 2030? Can you imagine the public excitement if the brokerage houses started investing 401ks and recommending investments to investors to diversify into crypto ETFs and crypto went up 50x on the money in the next 5 years? So there's your political angle. So politically, that's what people want to see. Politically, that's what they're going to deliver on. And they're going to quarantine the price inflation to the markets where there's a political appetite. Pretty, pretty simple equation, huh? And why is that the equation? Because that's obviously the equation because nothing else works. If they don't do that, why would they not do that? Doesn't that make sense? Exactly what they want to occur. They need the inflation. They just can't have it in the places where the general public's going to start complaining because there's your civil unrest, there's your political turmoil, and your politician turnover, and your election day surprises, and that's why the politicians do what they do, and it's not what they say, it's what they do. So this is clearly what they're going to do, and it has absolutely nothing to do with what they say. What they say, every word out of every politician's mouth has everything to do with placation, has everything to do with catering to exactly what people want to hear. So they're content with the political establishment, content with the status quo, that everything's going to be okay. Politicians' words are the tissues. There's here. Would you like a tissue? Everything's going to be okay. And then they're busy behind the scenes putting in the work to actually make the financial causality sequence of events play out exactly the way everyone wants it to play out. I'm post cynical, cynical to the point where this is the only way it could play out because it has to play out this way. And I would, in my mind, I'm like, this is a completely managed system. It's controlled, and they lose control to a degree, but they can't not respond, and they do respond, and they only respond in one direction. It's not like they respond, oh, well, we got to get the system to deflate. We got to get deflation to really take hold. No, that's not the response. The response is, all right, FDIC, bail out the bank. All right, Federal Reserve, we need some, got to throw it on the balance sheet. Got to make sure it doesn't blow up. Got to buy some MBS so interest rates are managed and the big lenders, Freddie and Franny, don't blow up. Is this what they're going to do? So that's what they do. Yes, that is what they do. Just to be clear on the do. All right, so nothing has changed. Looking at the 6 month chart of the DXY, obviously, I mean the last time we talked about this is probably a month or two ago, but we're looking at a 6 month chart. So here's this little green candle right here, bouncing off the 6 month 100 SMA is every conversation we've had over the last 6 months, which is basically nothing. So you guys see, that's where my mentality is. Nothing has occurred in the last 6 months of our conversation. But what has occurred? Where's my mind at? My mind's here. This this is what's occurred. This is the story. That's the local story in my mind. And that's the top of 2021, end of 2021. Blow up top. Fed started raising rates at the end of December, Q4 2021. And then, if you really want to have perspective on where we are, here's the story. This is the story. My goodness. And that is a different story. So I just told an entire opening monologue, but this is a bit of a different story because this factors in 16, 17. And that's even more important. I'm not gonna start doing that right now, that story, because I told it. I was maybe like maybe even this past Friday is when I told the pre-2020 story. But here's the big story. Because it all started back here in 16 and then 17. And that was a bull market. And that's where a market has currency. And the currency is giving you hints It's telling you little whispers of what's going on. So we had our earliest whispers of what's playing out in crypto in 16, 17. Then 2021 came along. And now what's the story for 22, 23, 24, and 25 thus far? The survivors. So 23, 24, 25, if you really want an analogy, that's like dot-com bust. That's 2020. That's 2000. That's when everything blew up. Everything bubbled in 2021 with the giant fiscal spending. And 22, 23, 24, 25 is the market telling us, all right, there's something here because there's a whole lot of technology and there's billions, if not trillions in market cap. There's billions of countless billions of dollar currency units. So there's something here. And so what is here matters. What tech is here matters. And there's not so much. And that's what's so exciting because the winners are obvious. The winners are screaming. The winners are screaming to us the stuff that's meaningful, the tech that's meaningful, because there's was investment opportunity. There's been principal depreciation. There's been significant value. There's been significant cash flow. And not only has the tech been meaningful, the investments have been meaningful, depreciating, but meaningful depreciation because they've survived. What happened in 2000? Everything collapsed. Was Amazon not meaningful? Was Microsoft not meaningful? Was a variety of other tech players not meaningful, even though there was the depreciation? But so you saw the markets collapsing. So what survived? That is the story. That's what's meaningful. So if you want 22, 23, 24, 25, the last 4 years have been maybe post 2000 from a story standpoint, maybe comparable to a degree. Maybe. Anywho, now we zoom back in on the weekly and I'll take some comments, and the weekly will drive you nuts. This will drive people mad. There's no one left in these markets. Who's going to buy at 95,000? Meanwhile, in March of this year, Bitcoin was at 75,000. And then in August of 24, Bitcoin was below, was at 50. Absolutely wild. Last year's been absolutely wild. Aerodrome, oh my God, Wednesday's announcement with Aerodrome. What a stunning announcement. I know folks want to hear me talk about that. I'll get to that. Let me do commentary. I know Arrow had a bunch of questions on Discord, and then that's primarily Aerodrome related. And what else did you want me to talk about? Oh, discounts, discounts. All right, so maybe in the context of Aerodrome, that's a good place to talk about discounts. But let's do commentary. Harshal, good morning, Cap. It's time to sell what can be sell. Keep only lock tokens. Yeah, well, not necessarily. Um, I'm very comfortable with Bitcoin in yield basis. What else do I have that's liquid? I don't really have much that's liquid. I have stable coins and I have the LP deposit and yield basis. That's pretty much it. Couple of the forced unlocks because of balancer, I liquidated that stuff. So anything that could be liquidated, I did liquidate, and those were probably good choices. Clawed back some cash, locked in some, losses and whatnot, and that's okay. What matters in right about now, in my opinion, is rule number 4. Make sure you have enough cash so you're not forced to sell the stuff that you know. It's not just conviction. It's not conviction. Conviction is a term that gets thrown around loosely. There's knowing what is the proper investment, and that's a foresight. That's a vision. That's a clarity. And these are things that are maybe beyond the idea of conviction. Conviction is maybe a blind faith, and blind faith has no business in capital management. There's the obvious, there's the inevitable, there's the destined. And these things are destined to be significant um, b- business actors in these financial markets. The stuff that we talk about. These are the destined businesses. These are the ones that survived the 2000 dot-com bust in crypto market terms. Hope that helps. IF, good morning. Prem, good morning. The bear market. Oh, bear market. If this is the bear market, I don't really want to see what a bear market is. You have a full mean regression to these. Look at that interesting level. What a confluence between the low here and the high here. 75. 75 would be a cool level. You have a wick through the 100 SMA down to 75, and you hold the 100 SMA on the weekly, and that'd be one hell of a retrace. And then you bounce around between 75 and 100. I don't know. I don't speculate on directionality. I just would say that would be an interesting chart. Would It's not like I would take action based on that chart because I don't bet directionally bearish nor bullish. But I think yield basis would print very nicely under those conditions. And for me, that is exactly what I'm looking for. I have question for those that are completely missed Ramsey's what chain and value prop. Um, Ramsey's thus far is unknown. I know a lot of folks are disappointed because with EtherX, there was a lot of exit liquidity. So you got multiples on your principal and you're able to take out a fair amount of capital. You can't do that with the Ramsey's drop on Hyperliquid. And that is what it is. I don't know what really to make of it. I know from my perspective, there's no reason to sell anything because whatever you were dropped is not worth as much. Um, uh, my 2 cents is, from my vantage point, I want to see the rewards next Wednesday. So this looks interesting. All right. So 677. I know from a Ramsey's perspective, I was getting $30 a week on Arbitrum. Ramsey's on Arbitrum perspective. So if my revenues go from whatever they were in Arbitrum to 677 a week, okay, let's see how if they're sticky or not. I don't see a reason to exit. I'm not a forced seller under these conditions. And of the four markets where Kingdom is deployed, was it Avalanche, Linnea, Sonic, and Hyperliquid? I probably think Hyperliquid has the most potential for cash flow. So I'm not inclined to do anything other than exactly what I'm well known to do. Get the weekly flow. Simple as that. But I don't necessarily expect that to be sustainable. Nothing about Kingdom projects has shown to be sustainable with regard to cash flow, especially under these relatively constrained liquidity conditions, especially off mainnet. Even mainnet's under significant pressure, even though currency supply continues to expand. All the other chains other than mainnet are cash grabs, and the capital flows back to mainnet. It's all about mainnet, ladies and gentlemen. It always was and will continue to be. Staff, this is certainly the place for a sanity check. Prem, are you bullish? I am neither bullish nor bearish. I manage capital based on 4 rules. Rule number 1, own more assets. Rule number 2, know when not to buy assets. Rule number 3, fuck you, pay me. And rule number 4, don't neglect cash because cash prevents you from being a forced seller. I follow 4 rules. I know I do not have bullishness nor bearishness. Now, in the back of my mind, I do generally have a sense of directionality. And what I could say to that probably aligns best with the way Raul talks. Bottom of the business cycle, credit needs to expand, move needs to roll over, SOFR needs to roll over, interest rates need to roll over, and global currency supply needs to expand. It brings us back to the macro conversation of where U.S. domestic currency supply is not what I'm most interested in. I'm most interested in global dollar currency supply, the dollars that are printed outside of the US versus inside the US, because when the currency supply of dollars outside the US expands, that's the real quote unquote bull market for crypto. That's where there's many more dollars than there are in the US. There's just endless more dollars outside of the US than in the US. I mean, maybe better said, there's endless more dollars printed outside the US than in the US, and a lot of those dollars end up back in the United States anyway. Isn't that weird? They print the dollars outside the US in the Eurodollar market, and those dollars basically flow into the United States, and that's exactly why equity markets look the way they look, and that's why the potential for crypto markets is absolutely staggering and mind blowing with regard to the multiples for market caps to become competitive with equity markets. And that's really the destination that I see. Are we not going to see crypto markets have market caps comparable to mid cap and large cap equities? Oh my God. Are we not going to see Aave run around at 100 bill? And isn't 100 bill maybe not the largest for like the biggest stuff? I mean, we're talking about the businesses. We're not talking about gas tokens like Ethereum or Bitcoin, which is a gas token. So that's a different considerations. Um, but I would think that the businesses in these crypto markets, uh, Aave being Aave being the 42nd largest bank in the United States by deposits. I mean, what are we running around with? What market cap? What happens when it's the 20th or the 10th and it's competing with Bank of Mellon, New York Mellon, which is historic, and the market caps probably get weird. Price to earnings, the multiples, so to speak, in equity market terms. Anyhow, Alessandro, can you compare the difference in the business story for the Curve opportunity versus Arrow? Different tech. Curve is full stack tech around dollar liabilities. They have a full in-house, vertically integrated stack of tech to support CRVUSD. That's what Curve has evolved into. It started with stable swaps, and stable swaps is big business, but there's a reason why I talk about dollars so much, and that's dollar stable coins are dollars and dollar liabilities, especially on-chain native dollar liabilities like CRVUSD and others, um, are the biggest business on the planet, going on $400 trillion between international dollar supply and US domestic dollar supply. And we're not talking about like M2 and stuff like that. We're talking about total amount of US debt out of the US and in the US. Probably about 400 trillion, give or take. You can look it up on Fred and whatnot. I don't have it. But Fred, which is the Bank of Federal Reserve Bank of whatever, Chicago or whatnot, and they have the metrics. So I bet you that's over 400 chill. So point is, that's the biggest business on the planet. Now, Arrow isn't a dollar printer. Arrow is liquidity financing and foreign exchange. With other business B2B products, seamless cross-chain liquidity, integrated bridging at this point. Mainnet deploy is absolutely wild. The presentation on Wednesday has a guy like me like, wow, price is misleading. It's the right allocation. I have the right ownership. It's gonna depreciate. The market's getting absolutely annihilated right about now, 95, with the lower low and the weekly for Bitcoin. Um, but we can look at technicals all we want. I just retain nothing has changed. I guess that's the best expression I could have. If anything, the story for what Aerodrome is from a tech and business standpoint is just freaking awesome. It's literally everything that I've ever talked about with regard to 2021 narratives. Mm, come on. I should be able to find it. What's that post I have with Yoda? There we go. This was done in December of 2021. And you know what the December of 2021 was? That was basically the top of the market. And this was a different world back then, boys and girls. And this is what I thought was coming in 22. And that was a couple years early, and that's okay. Seamless cross chain interoperability. Wednesday's Arrow announcement. Disintermediated protocol managed arbitrage, MEV protection, MEV mitigation and capture. Oh my God. Wednesday's announcement for Aerodrome. Widespread iteration of the current monetary policy. That's exactly what solidly V1 was. And that's what obviously the drones are. And that's what they call it? V3, whatever, Aerodrome V3. That's exactly what that is. It's everything that Andre talked about. It's the alignment of incentives, and it's just it can't be more perfect. It really can't. It's everything I could have possibly imagined when I wrote this, and they built it. You got to understand seamless cross-chain liquidity. They're breaking down the barrier of bridges. There was another thing I said back then was you're gonna not know what chain you're operating on, and you're not gonna need to know what chain you're operating on, and that's what really Wednesday's announcement was. Because if you don't know when you go to Velodrome, you're able to swap from chain to chain, just from any chain to any chain. It's absolutely wild what you can do. This tech is wild, and if they throw in mainnet, if they throw in whatever they throw in, it changes everything. Crazy tech. The greatest tech isn't always the greatest investment. That's something I've often said, and that's played out more times than I'd like. But the greatest tech is still the greatest tech, and we still got to invest based on the tech. Because eventually, if you buy 10 things of the greatest tech and six of them are hyper successful, post 2000 level, you've done well as an investor. And four things go bankrupt and completely fail, and that's okay. That's part of the investment equation. Hope that helps. Peter, good morning. Fugu, a pleasure. Ramsey stats are already impressive. Too early to say, but it looks promising. It does. Yeah. I mean, Sonic and Linnea, there's a lot of hype. Pharaoh and Avalanche, a lot of hype with Black Hole and whatnot, and complicated. Avalanche isn't really the hottest ticket in town. Linnea has a consensus narrative, and Sonic has the Andre narrative, and frankly, the most exciting thing, well, Hyperliquid has heck of a narrative. So from a kingdom standpoint, I would say that's probably the most interesting place to be. So the amount of capital that I had in Ramses, it was locked and it's not sellable. I don't want to sell stuff like that, and it'd be a massive loss, and I can't with regard to my accounting rules. And now it's on Hyperliquid. Great. Let's see what kind of cash flow there is. It's not something I'm thinking too much about, other than it capital migrated over from Arbitrum to Hyperliquid, and we'll see how it plays out. Too early to say is a reasonable statement. Feedback. Can you give a more detailed overview of your thoughts on MicroStrategy's preferred offerings and their risks? Not something I would invest in. Introduces a great deal of potential volatility into the Bitcoin price. Um, I don't think too much about it. I don't invest in things like that. I'd be much more interested in taking something like a TBTC or WBTC and deploying it to yield basis. What are you getting? You're getting 10%, 10.5% on strategy, paid monthly. Yield basis, you're getting paid more. So the only reason people invest in that shit in equities, I don't. People live under rocks. They miss all the opportunities. And again, 20+% on token APR. And frankly, from a trading APR, I know from a deposit experience, I'm at up about 3% on my position. Probably what they launched a month ago, give or take. So it's probably 30 something percent for trading APR, just anecdotally shoot from the hip. Um, again, 30% on Bitcoin. fuck's investing in strategy? I just have so much greater of a comfort level deploying capital to the most what I see as the most trustworthy places in DeFi land than ETFs and anything that could be done in equities land. I don't trust people. I trust software. And that blows people's minds because I talk to normies about my allocations to crypto and they're like, "How are you comfortable?" And I'm like, "I'm much more comfortable with these allocations than I am with, a Schwab or a Fidelity or brokerage account. I don't trust the boards. I don't trust people. I don't trust regulators. I trust a ledger or a hardware wallet, and I trust software deployed to immutable contracts on the blockchain. That's what I trust." Good morning, Cap. Much a pleasure. What's the alpha? Oh, the alpha is nothing's changed. Everything is, it's the end. It's the end of the business cycle. And that's an exciting place to be in because most folks don't remember 2019. People are thinking about deploying capital and building portfolios under these current conditions. In 2019 was 5 years ago. And that is a different world. And a lot of people, if you're 20 years old, you were 15, you weren't thinking about finance in 2019. So it's only for us old folks to remember 2019. And in 2019, it was doldrums, and it was the bottom of the business cycle also. And lo and behold, in September of 2019, the United States banking system failed. Repo apocalypse. People don't know or don't define September of 2019 as the banking system failing because they don't know, but it did. And then March of 2020, yada, yada, yada. That's where we're at cyclically, yet again. Control chaos. They manage what they can to keep markets moving. That's correct. It's at some point, social civility will be financed, is something I often say, if folks remember. Um, Social stability, have jobs, finance social. There you go, finance social stability. My man, you've heard that phrase before. Sir Joe, present. Thoughts on folding VE Velo into VE Aero? Great, yay! Isn't that something we've always talked about? Now we have a single platform that goes across the optimistic superchain and mainnet. Oh my God. Lovely. One place to manage capital, one place to get cash flow from all those sources, and I can't wait to see what the hell plays out on mainnet. I wouldn't be surprised for anything. I have no expectations. The only expectation to have is no expectation, and the market will tell you exactly what is going on. So don't not having an expectation doesn't set you up for excitement or disappointment. It just lets you see what's going on. So I'm very excited to see what will play out. Um, I I think it will deploy, and if anything, it should increase cash flow. I don't think it will decrease cash flow. That wouldn't make much sense. So a mainnet deploy is likely to be additive, and I look forward to that. Have you decided what you will do with your XRAM drop? There's nothing to do. It would make sense. It would make no sense for me to do anything. The appropriate thing for me to do is nothing, and um, the appropriate thing for me to do is click claim on Wednesdays. That's the appropriate thing. Given the size of the position, it's not like what with six-figure airdrops with Etherax. The appropriate thing to do is to nothing. The size that I had is like, all right, great. It migrated from no cash flow on Arbitrum to cash flow on Hyperliquid. Yay. So that's a win. Simple. Now I know what you said. I know you wanted to pad the cash because you thought it was going to be like an Etherax drop, but doesn't always work out like that. So just make sure you got cash so you're not a forced seller because at the bottom of the damn business cycle and the credit needs to expand. If you need the hopium, look at Raul's post, please. People are too critical of him. He gets it. Where's the post? Did it like a day ago. Geez, he posts a lot here. If you need some hopium, look at his post. Read Raul's post. This is it. That's it. There's a lot of people that post like this. Give us where things are heading, but this is the most robust list of stuff that's coming. This is the best you're gonna get. in a post, aside from actually understanding the macroeconomics and looking at all the data that he puts out. This is everything you need to know, ladies and gentlemen, about why rule 1 through 4 is all you need to think about, and surviving in markets, because at some point the liquidity will flood and the spice must flow, and the price inflation needs to be quarantined to assets that don't piss off the general public. The price inflation needs to be quarantined from consumer prices, consumables, and real estate. They want the price inflation to be quarantined to asset prices like the stock market and especially crypto. The reason they probably want to keep it a bit out of equities, which they're not necessarily able to control, is because of how much inflation there's been in equities over the last couple of years. So, what better thing to do than to monetize a completely unmonetized market like crypto? And it's not like our good Treasury Secretary has been telling us that's exactly what they want to do. That's exactly what they want to do. They want to monetize this so bad because they want the tax receipts and they want the headlines and the political points associated with the biggest bull market in history. That's what's going to play out because that's exactly what they told us is going to play out. Simple. Keep it simple. Peter, longest business cycle contraction, and people are bearish or capitulating. Good asset here, bit nonsensical. Peter, the ladies and gentlemen of the crypto space listening on the stream. That's the comment of today. Okay, longest business cycle contraction, and people are bearish and capitulating. Good assets here. It's nonsensical. It's all noise. All noise. It's all one single 6-month candle everyone's squeamish about. When price action moves sideways and to the downside, I often think, so what do I do? And the answer is often nothing. What do you do? What are the choices? Most people are like, oh, am I bullish or am I bearish? Should I buy or should I sell? What are your choices? If you sell, what are you going to do? If you buy, what are you going to do? That's why I define the 4 rules. That's why I identify the 5 businesses of crypto. That's why we've had these conversations we've had that are so different than so many conversations out there. Chicago, have you been accumulating on these drawbacks? No, I don't need to. I've reached my accumulation goals. I have my ownership targets met. I own what I want to own. I have no additional exposure I need. If anything, maybe more concentration. I did. I liquidated the contango on the balancer exploit. I can't liquidate balancer. I would if I had access to the balancer, the BAL, I would liquidate that also. But in the meantime, there's nothing I can do. So if there's nothing I can do, I don't think too much about it. So I'm not buying on the drawbacks because I don't need to. Now, obviously, it's a biased reality from my state of my age, financial portfolio, so on and so forth. I can't really speak to a younger person necessarily. It's an entirely different conversation. That's not necessarily the conversation for today. I don't need to buy on drawbacks. How do you determine when to execute rule number 2? Good question. Everyone has to come to their own conclusions, obviously. 1, 2. For me, do I have enough? The problem there, it's a very existential problem. What is enough? So many people want more and they're so greedy and it's more and more and they don't know when enough is enough. Probably the best place to find enough, and I'm not a religious person necessarily, but I'm a, I'm a traditional person. Uh, Church or temple or whatever floats your boat. But find when enough is enough. What does humble mean to folks? You know, pick your pick what you like to listen to. 10 Commandments and whatnot. Don't be greedy. Don't covet, and don't be humble. When is enough enough? Folks need to answer that. To be a good investor, you need to know when enough is enough. When have you reached the proper position size? What is a proper portfolio balance? When is enough enough? You can't spend all your money. Rule number 4, can't neglect the cash position. You need appropriate amounts of cash because otherwise you're a forced seller. When to execute rule number 2, when enough is enough. And that's a hard it's something I can't answer. I could answer for myself. Enough is enough for me. I'm in rule number 2. I'm not buying because of the amount of cash I have. I want the cash. I need the cash. I have to save up for my kids' school next year. I have things that I like to buy, my supplements and my whatever peptides or whatnot, and I need cash for things like that. I have bills to pay. I have my wife's credit card payment, and I need cash for that. And I can't spend all my cash on investments. Bear in mind, what's the opposite side of that coin? If there's a good investment, what is a good investment to override those realities? And that's the conversation that we have with ourselves. And I've had that. I've had that with the wife. Honey, I have an investment I want to make. How much is it going to cost? "Oh, I'm going to spend 75 grand." And she's like, "Are you sure? How much cash do we have?" "Oh, maybe that'll be 50%, 75% of our available cash." "Oh, are you sure, Noah?" "I don't know." There's always that conversation, that risk. And that's what investing is. It's a calculated risk. And I haven't done that in a bit. The last thing I allocated to was Samsara, that Nirvana, what's coming out soon. And that was my last allocation. And that's okay. That was months ago at this point. I look forward to that. That's coming. How many times on average do you buy yearly? What did I buy this year, ladies and gentlemen? That's actually a great question. Velodrome, Aerodrome, clearly the Samsara allocation. Aero was Contango this year? I think it was. In hindsight, Contango was an inappropriate allocation. I don't invest in derivatives. There's foreign exchange, credit derivatives, liability printing, and liquidity financing, the 5 businesses of crypto. I don't invest in number 3. I don't invest in derivatives. I don't like derivatives. So look at me. There you go. That's what is Samsara. It's literally a market of derivatives. So that's different though. Look at me justifying. That's such the platform is wild what Samsara is going to be. So I'm very interested in that. It's a bit different. So that I think was a decent calculated risk. Um, these are not necessarily good answers for the novice investor. Very, uh, I often remind folks you have to respect the size of the portfolio. I'm in my 40s. If I was in my 20s, these rules are different. Uh, and I have to wrap up the stream in a couple minutes, so I can't get into different investment methodology for different age groups. If you're in your 20s, your 30s, your 40s, it's all different. It depends on your career. It depends on your living conditions. Are you living with family? Are you sharing bills? Are you spending more than you make? Are you living below your means? You can invest differently. And I know exactly what I recommend to 18 to 20-year-olds. Exactly what I tell my kids. My kids are young. My kids are not allowed to move out. They're not allowed to leave home until they're 30. Okay? Because they need to spend their 20s investing to prepare to have capital in their 30s. Otherwise, there's no mathematical way any of this works for them. So that's an absolute requirement. And nothing's guaranteed. I don't know how that's going to play out with them, but that is certainly something I'm going to try very hard to have actually play out. How about that one? Asking as you don't strike me as someone that buys weekly. No, certainly don't buy weekly. If anything, I buy very infrequently. I think I bought three things, 3 or 4 things. No, yeah, I didn't buy yield basis. Um, just an LP deposit. So maybe 3 things this year. Me and Arrow talk a lot. I think maybe 3 things. Just thinking out loud here. There's the Aerodrome, the Velodrome, and the Contango. Was Contango this year or was that last year? And then the Samsara. So four things this year. The whole year. The whole year. Anywho, Dean made it live. Serenity now. Serenity now. Number one in play. Own more assets. Yes, that is a reasonable rule. And depending on a variety of conditions, rule number one is perfect. You don't. Rule number two is not necessarily enforced. Not necessarily. It depends on a person's scenario or situation. So good reference, and everyone has to choose when is what is most appropriate for their particular financial conditions. And if anyone has uh, evolved and assimilated and consumed these strategies and rules, Dean, you're on a hell of a journey, my friend. Keep it up. I mean, would you sell VE Velo that add more arrow? No, I'm not doing anything. I'm definitely not selling a VE NFT. Absolutely not. If anything, just no, no. Less is more. And how many times have I missed out because I've done less and not engaged or not kept up with news? And that's okay. I'm not doing anything. Arrow. I'm going on. I have a 2 o'clock call at work, and I'm going to spend the weekend with the family. And less is more. And as I answered for Chicago, I, I allocated the four things this whole year. Everything else is just thinking and understanding the macro conditions and cash flow. And that's it. That's the routine. That's I have no expectation other than cash flow. And that this is why I remind folks, I spent since 22, I spent a good amount of time on accounting, not even on investing. I spent a huge amount of time on accounting, almost more important than investing. Oh, 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 oh. Dean coming in from left field with a damn good rule number five. Ladies and gentlemen, I'm probably going to say that that is really good rule number five. I wholeheartedly agree with that. You never, ever quit a day job. You always got to work. You always got to do something. I think that's a really good rule number five. I'm not going to adopt it right now because I can't do it on the spot, but that's really good. That might qualify. Well done. Peter, I agree. Hyperliquid seems to be better market of all the Kingdom products, but time will tell. Time will always tell. That's right. So in the meantime, there's no action for me to take. Can you say about the new Arrow? Is it voting on Ethereum, but you get fees? Everything's on base. Everything remains on base. Base, 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 base. So the way Arrow will work is the way Velodrome works, and it's the whole optimistic superchain, except now including mainnet. So Aerodrome is going to be absolutely wild. And this is next year when they roll out in all of V3. How do you sell VE lit? That's all locked. That's dead. Yeah, there you go. I didn't buy any of that. That was years ago. The original VE lit, and then we got VE Bunny, and it evaporated into nothing. That's okay. That was 5 figures down the drain. You can't win them all. I look at the balancer. That's gone. The contango was, I think I lost like 40 grand on that thing. Gone. It's gone. You can't win them all. You can't win everything. And you're not going to win everything, ladies and gentlemen. And that's okay. You just need to win more than you lose. Happy to be here, Noah. What do you think about the info QE beginning? No, QE does not begin on December 1st. QT ends December 1st, and QE is not necessarily going to happen at all. Um, I'm much more interested in interest rates. I'm interested in what Treasury comes up with. I'm interested in the Clarity Act. What I have up here is Raul's post. This is what I'm interested in. So I posted this earlier in comments for people to review. That's what to keep eyes on. All of these points that Raul mentions. Contango is 2025, right? Tax loss harvest event. I didn't have a taxable gain or a taxable loss. It's just an evaporation of capital in a private fiduciary controlled entity. But that's my own personal accounting complexities to manage. No, no, that's a whole nother conversation with peptides. Lots of interest in that. People in their early 30s should be. Well, I only have 2 minutes. I got to go to a phone call. Bring it up on another stream. We'll talk briefly about it. But I have general distaste for the establishment and the status quo. So I have a high opinion of the concept of peptides, which is basically ways to make your body better. So the medical establishment fixes illness, and I don't want to fix illness. I'm not sick. I want to be stronger, healthier, more energy, more fit. I w So that's the types of things that are interesting. And doctors don't do prescriptions for things like that. So that's unfortunate. So there's plenty of ways, especially nowadays with Kennedy and Health and Human Services. Um, he's taken a lot of the pressure off a lot of the things that we can have access to. Anyhow, good question though. Long conversation, Eric. Contango was December of 24. Okay, so three things in 25 only. Only three things. Buenos días, señor capitán Michael Ugino. Uh, Bienvenidos, como siempre. Disfruta y disfruta la día. Te veo. El viernes te veo en los lunes. Okay, disfruta el fin de semana. So Arrow will be the LP on ETH mainnet, but voting for them on base. Well, Arrow will be everywhere, just like it is on Optimistic Superchain. I mean, is Velo on not Optimism? There's X Velo not on Optimism. So Arrow is going to be on base. It's all base. Everything about Arrow is on base, but you're able to engage on the entire Optimistic Superchain. So I can't. I'm very tickled pink about what's going to play out with Aerodrome. It really hits all my check boxes about what I was looking for back in 2021. Where's that? Back in 2021, ladies and gentlemen. Wild where we've come from. That this is what I thought would play out in 22, and it took some more years. Oh, thank you, Chicago. Much appreciated. Let me wrap it up. I got to go to a phone call. Friday, November 14th, 2 p.m. 238 people made it to the end of the stream and are all now that much more rational because of it. Thank you all for joining me today. Enjoy your weekend. Sit in the sauna, get some exercise, do some research, use AI, make less decisions, be humble, keep things simple, don't be complicated, take care of your family, get some sun, sleep well. I will see you, boys and girls, next week. Until then, peace.